Those recent price swings, especially in the tech sector that you guys were just talking about, very much in focus at the Sohn Conference in San Francisco yesterday. The event comprises about a dozen hedge fund managers presenting their stock picks for the market right now. And this year, there were actually very few tech ideas and only one long in the internet space. Light Street's Glenn Kacher touted Farfetch, the British e-commerce company. His fund was up almost 30%. Not a typo, 30% last year, net of fees, thanks to the swoon in technology shares. We asked him, though, how he's repositioning his portfolio this year amid the recent sell-off.
We're always looking at our portfolio and trying to find the best returns. The trade that a lot of people talk about is the FANG trade, of course. Yes. We did have a large position in Facebook. We sold that several months ago. And but we've kept a very large position in Amazon.
Another presenter, Gil Simon of Soma Equity, told us he had been spending the last few weeks shorting names that people loved that are now down 30 to 40%.
We've observed that there was a lot of crowding in the tech space. And so what you've seen is, and it's human nature, that people chase the highest growth companies and the valuations got marked up to levels that we've almost never seen in some of the subsectors of tech, specifically in software, internet, the kind of anointed winners.
Simon declined to say specifically what he was shorting, but on the long side, he's actually been adding again to his position in Netflix, among his favorite FANG names at the moment. However, he presented a long in the New York Times, my former employer at the Sohn event yesterday. Guys.
You know, Leslie, I don't want to throw you under the proverbial bus, not even the electric trolley or whatever they've got in San Francisco these days, the scooter. Were you in the room?
Trolley's still there.
I know. Were you able to be in the room?
Yeah, we were able to be in the room.
Was there the aha moment? Like, a lot of times, like David Einhorn used to be famous for that, kind of had this big lead up, reveal the name, and sort of the whole room would scatter, and you could start hearing people typing out their orders on their phones immediately. Was there that kind of a moment?
I think there were a couple surprises. The New York Times pick was a surprise. It was unique, especially for this conference, where you get a lot of people in that TMT, technology, media, telecom world. Here is a known tech investor choosing a media name in this current environment. A lot of talk about the valuations. There was a funny joke. One hedge fund manager pitched an Indian beverage company, a beer producer. And before doing that, he said, I would like to buy everyone in this audience a drink if I could. But instead, I'm going to do the next best thing and pitch a company that actually makes beer instead. So he got a chuckle there. It was clear that the elephant in the room was really this market activity, really this volatility, and people were almost using the event as a way of sorts to try and bounce ideas off of each other about really what to do, because it's no secret that hedge funds really have not been handling this market very well.
Absolutely. Leslie, thank you very much.